Simon Bransfield-Garth, CEO of Azuri Technologies. It's a pleasure to be speaking to you again.
Good morning.
Morning, and thank you so much for the Mindspeak. It really was very insightful and a powerful session, I felt.
Yeah, thank you. It was a really good session and really good to have our partners from APA and Unilever there as well.
And the level of alignment was really great as well, I thought, you know, between what they see and what you're seeing.
Yeah, I think it's fascinating that if you look at how traditional businesses developed in Africa, there's been a rather conventional, if you like, view of how that's done.
Closed garden type approach.
In a sense, yes. And I think that in the last few years, people have started thinking about how you reach out to that 50% of the market that normally doesn't get touched, and coming up with innovative ways of doing that. So when you get a major FMCG company like Unilever beginning to think in that way, you can see that some of those ideas are beginning to get sort of mainstream.
No, definitely. And I mean, I had a lot of feedback and everyone was very, very impressed with what you said. And most of all, I think being an economist, you know, the actual net GDP ad you were talking about was so far off the charts.
Yes.
I'm surprised you're not on speed dial for every head of state on the maybe you will be.
Well, maybe we will be, yes.
Maybe you are.
Yes, yes.
Simon, what I wanted to talk about today was really, you know, I'm a financial analyst. We look at we look at balance sheets, we look at businesses, we look at opportunities. I tend to look from a macro perspective first. You know, what can really change the world? What, you know, going back to did I get on Amazon, and you know, those sorts of types of things, which are where people make a lot of money. And now I wanted you to just tell us a little bit about what do you have on your smorgasbord for investors? Are you looking for investors? And you know, just to give us a flavor of what this opportunity really is and a call to action.
Yes, no, absolutely. Thank you for the opportunity. So Azuri is a venture-backed business. We've been in business since 2012. And like most venture-backed businesses, we do financing at periodic intervals, equity financing. But actually, in the case of Azuri, we also do novel debt financing. So the basic business model of Azuri simply is to put an asset in the hands of the customer, and the customer pays you back over a period of time. And so, of course, the faster you grow, the more working capital you have tied up in those assets, in those many, many thousands of customers. So Azuri has been a leading player in the area of receivables financing, to be able to finance that working capital. There are some companies in this market that have tried to finance that working capital out of equity. And long term, that's doomed. You can never raise a valuation of a business sufficiently to be able to do that. Effectively, you're trying to behave like a bank, but of course your only depositors are your equity providers, and that simply doesn't work long term. Similarly, if you try and raise your finance as on-balance sheet debt, sooner or later your balance sheet runs out. So the only way sustainably to do this is to have off-balance sheet debt, where the debt is secured on the forward revenues from the customers.
But the complexity is it's nickel and dimes, isn't it? In the sense that you've got hundreds of thousands of customers who are paying you a very small amount every day. And in my mind, as somebody in the financial world, how is that practical?
Well, so finance, and this is one of the challenges of microfinance, financing an individual consumer is very difficult because credit scoring an individual consumer is very hard. Actually, credit scoring 10,000 consumers as an aggregate is really quite straightforward. And so what Azuri has done is to use the data of repayment history and repayment performance from our customers, and use that as a mechanism to be able to raise debt capital within special purpose vehicle companies, where we will take 10,000 customers, 20,000 customers, and raise debt associated with those specific customers. So this was something we started a long time ago. We started this in 2014 when we won the Bloomberg Fire Award in New York. And it's taken a fair few years to get to the point where we have that in place. But for the last 2 years, we've been operating that model, and it works extremely well. So from an investor's point of view, what it means is the SPV can be as narrow or as broad as you like. So we have SPVs which are targeted on a particular geography, they're targeted on a particular currency, targeted on a particular product in a particular region, whatever it happens to be. And typically those SPVs range from 1 or 2 million up to 10 million type order of magnitude. And obviously you can have multiple of them as necessary. So it provides a really interesting way for investors to get exposure to the market, but in a way where they don't have to understand all of the complexities of all of the territories in which we work. They can choose to have exposure, say, to, I don't know, TV products in Kenya, for example. And you know you're dealing with the Kenyan shilling, you know you're dealing with the business environment in Kenya, and you know the product that you're offering and the type of consumer it's going to. So that makes it much more straightforward for investors to be able to get a sensible assessment of the commercial opportunity.
So, and is this correlated to the speed of rollout? So, for example, I know after Nairobi you're going to Lagos, and I assume that you're going to be rolling out Azuri in Nigeria.
Yes, absolutely. Yes.
So, is there a correlation between your requirement for this type of SPV debt finance product and the acceleration in the business, geographical acceleration in the business?
Yes, I mean that's one of the innovations in Azuri, that we've been very capital efficient in the amount of equity we've taken as a business, because we're able to use this debt in order to provide the working capital. So when we go to a new territory like Nigeria, then we will finance the rollout for perhaps the first 2 years in order to build that customer payment track record. And then after that, we will finance that using off-balance sheet debt. In the case of Nigeria, that off-balance sheet debt will be denominated in Naira. So that then gives sort of natural hedge, if you like, to exchange rate fluctuations. But yes, it's the ability to raise that capital that enables us to scale without limitation of just general purpose working capital day to day.
You just said that you've been very efficient in terms of capital allocation. What is the equity opportunity? You know, most people, when they make investments, tend to look at just pure equity. We like the growth curve. We're excited. Let's buy some shares in Simon's business.
Yes.
Are you also selling shares in the business?
So we do periodically do funding rounds. And one of the attractions of Azuri is that we've achieved our position in the market with a fraction of the equity investment that many other companies have taken. And that really has two advantages. So fundamental to the business model of Azuri is to use partnerships to go and deliver the activities on the ground. So for example, we use partners to do our distribution. So Azuri doesn't need to own a single shop. We don't need to employ the last mile agents and so on. That's all done by our partners. So we've turned the distribution process from a capital expenditure to
I think that's the genius of your model, actually. I had a friend watching you in South Africa who said, this is just brilliant.
Yes.
Yeah.
And so what that means is that we don't actually require huge amounts of equity. But yes, you're right. We do periodically do equity funding rounds. And it's that combination of the equity and the structured finance debt which really separates Azuri apart from some of the other players in the market.
You said the Bloomberg Fire Award. Which year did you mention?
2014.
That? 2014. How long have you been in operation? And the nature of a business like yours with a growth opportunity of 600 million people is, and if we look back in the last 10 years, is businesses chase growth.
Yes.
Profitability can come later because people can see the scale of the opportunity. In terms of your business and in terms of, are you still a net spender, or are you at break even, or where are you in that scheme of things?
Yes, so Azuri was formally formed in 2012.
Yeah.
And we have always taken the view that we need to operate as a business rather than as a sort of .com, eyeballs, users, whatever it may be. So as a business, we will be EBIT positive this year. So we'll be one of the few pay-go companies that are in that position. And we expect to be cash generative within 3 years, which again will be one of the first companies to be cash generative. So yeah, very much about ensuring that Azuri is run as a conventional business, and not just simply chasing growth for growth's sake. Having said that, Azuri last year was the 233rd fastest growing company in Europe.
I saw that, the FTSE index.
FTSE 1000 fastest
Congratulations
growing
on that.
Thank you. As a company, we've grown at more than 100% per year, every year for the last however long. So if you put that in context, the mobile phone industry grew at roughly 65% compound. The pay-go industry is growing at this sort of 100% type rate. And the real challenge is, for a business, it's possible to grow at that sort of rate for the first 4 or 5 years. The difficulty is continuing that for the next 5 years and the next 5 years. And really, the way that we've done the financing with the off-balance sheet debt, that means that we don't have a financial limitation to continuing to get high growth rates.
So from what you're telling me, it's obviously very compelling, and I think I've had that feedback from a number of people, and we'll deal with that separately. But there's a lot of noise in your sector. There's lots of other companies. What differentiates you from everybody else?
So for a sector that's as young as it is, it's surprisingly diversified. So we have pay-go companies who see themselves as utilities. We have pay-go companies that see themselves essentially as microfinance businesses. Azuri sees itself as a consumer services business. Our view is that electrons are boring, that customers couldn't care about kilowatt hours. Customers care about what can I watch on television, how long can I watch it for, how long can I keep my lights on for, have I got a smartphone, do I have internet access, all of those sorts of things. So that's really Azuri's focus, is to deliver customer value in terms of absolute outcomes. And in normal markets, that's fairly conventional. But think back a little bit to the customers we're serving. Our customers 3 years ago were using candles to light their homes. Now we're giving them 32-inch television with 60 channels of content and broadband. So it's such an enormous, it's absolute revolution. But by the same token, we can't expect the customer to know which particular broadband provider they want to go and choose. And so we have a responsibility to provide the offering in terms that the customer readily understands, in terms of the benefit they get out of it, rather than the individual component parts that go and make it up. So in terms of the customer ethos, that's something that is very special to Azuri. In terms of the business ethos, we have a model where we center the business on data. So everything we do is based on data. It's customer data, payment data.
That's what I found very interesting. The level of artificial intelligence.
Yes.
And yes. So you see it as a data play as well?
Well, data is the underpinning of the business. Then within the business, there are a whole series of different functions which other people can do very well, and that's what we do. So we have our products manufactured by a superb manufacturing facility out in Malaysia. We do our distribution through partners, so we don't own call centres, we don't own logistics companies, we don't own shops, we don't own the last mile network, and so on. So a number of companies have taken the view that they wanted to own all of those assets. Our view is that actually the return on investment of a physical piece of shop is not that high compared to the return on investment for a business like Azuri. So we would much rather partner with other people to acquire access to those assets without having to have the capital spend to do that, and really invest our money in the things that are uniquely differentiated in Azuri, which is how we do our finance raising, how we do our customer go-to-market, how we do our product design, and how we manage data to be able to ensure that we give an excellent customer experience to our customers. And one of the sort of memes going around the market at the moment is this idea that the market is horizontalizing and it's sort of selecting into layers. Azuri's view is that if you simply run your business as a horizontal player, you're missing out on the main opportunity. And the main opportunity is the interplay between the distribution, the finance, the products, and the customer service. So for instance, we can only expand our distribution because we can finance the assets, because our distribution partners can't afford to finance those assets. We can only get finance because we've got a high enough quality product that we don't get product returns. We can only grow because we've got the distribution channel to be able to do it. And so it's that linking of those different component parts that really sets Azuri apart, rather than just having very sort of rigidly separated individual elements in the supply chain.
To finish off, let me ask you, people will watch this interview and say, right, how do I back Simon? And let's say they do. Is this business going to be in 5 years' time?
So Azuri is continuing to grow. We still are at the position where, as an industry, we've got about 3% market share, something of that nature. And the great beauty of the pay-go industry is that when you've got a customer, they're still a customer for your future product. So even if you got to 100% market share like you have with the mobile phone business, you've still got 100% of the market to go after. Azuri is currently focused on 5 countries. So we're in Kenya, Uganda, Tanzania, Zambia, and Nigeria. And for the next 2 or 3 years, that's going to be really our growth focus, to really grow that. We've got a very exciting announcement in Nigeria later on this week with a really major player in Nigeria, not dissimilar to the announcement we did with Unilever in Kenya last year. And we will be adding some new territories as time goes on. So really there are sort of 3 axes of growth for Azuri. One axis is customer acquisition. One axis is increasing the average revenue per customer, because our customers are moving from lights to TV products and other products. So the amount of spend, the weekly spend from our customers is growing. And then the third aspect is the over-the-top services that we're able to offer our customers, whether that's insurance services, e-health services, e-learning, fintech, a whole variety of other services, which then enables our customers to earn more money. And so we're not increasing the proportionate share of wallet that we're taking from our customers.
You're increasing the wallet
share. We're increasing the wallet because the customers are getting wealthier, and so we're getting wealthier on the back of that. So those 3 dimensions are really the 3 core dimensions of growth of Azuri in the coming years.
Simon, it's been a real pleasure speaking to you today. It's been a real pleasure interacting with you, and I'm really excited by the Azuri prospect. Azuri is a play on a word called Mazuri, which means nice in Kiswahili. And I really wish Azuri a lot of good fortune in Nigeria, and that a lot of people come knocking on your door to take a bit of a slice of the action.
Well, thank you very much indeed, and thank you for the opportunity to explain Azuri.
Thank you very much.
Thank you very much indeed.
Thank you.